I'll tell you a little bit about us and myself. We're a brand new early stage fund. We've been around for about 1.5 years now. There's 4 of us. 2 of us are full-time, 2 of us are part-time. We've all been in the business of building companies. I did a startup right out of university that I sold to KPMG. I did a second startup that failed. I did a third startup that raised about $35 million that also failed. It got sold to Comcast for 10, and then I had a 4th company that sold for 135. It's the big X-ray machine that you see at the airports when you go through security. It's not an X-ray, it's a millimeter wave radar machine. Rob was an early product manager at Google. Dylan started his first company and he sold it to Activision. It's the networking engine behind Call of Duty, the video game. And then he did a second company that he sold to GameStop. And VJ just sold his last company to Twitter and is running Twitter's engineering group in New York City. So that's a little bit about us as principals. We've all been on the company building side, which I think makes us a little bit different in Europe. As a fund, we're an early stage fund. We tend to write checks of between $1 million to $2 million. Our last 2 rounds were $3 million. Both of them were reasonably pretty close to off of a sheet of paper investments. So we're pretty big check writers in the context of Europe at the very early stage side. We generally feel that European companies are underfunded compared to American companies. As you can tell from my accent, I'm from the US. I spent most of my time in the Bay Area, so did Rob before he moved over to Europe. Same thing for VJ. He was an early engineer at Google. So we write bigger checks than I think other folks, but we tend to write early checks, usually early in the formation of the companies. We really look for 2 kinds of companies. The first company is a company that's inventing a brand new market. So we love these kinds of things where something has changed underlying in the industry that allows a new kind of company to get built. Usually the incumbent firms don't usually spot the opportunity or can't do anything with the opportunity. So it's usually ripe for a startup to go invent. And then it's a question of scale as fast as possible. So when Facebook released an API, a whole group of companies got invented that did social gaming. It didn't really exist as an industry prior to that. And I would argue that even if you got it wrong at that point and you built on top of MySpace, you probably still would have been successful, which was the case with Playdom and back in those days. So we look for those kinds of brand new industry or new categories. The other kind of company that we fund is a brand new disruptive market play. So something that goes into an existing market but has a fundamental disruption to it, 10x price point difference, 10x performance difference that allows that company to kind of come in and disrupt that industry and take over. Those are the only 2 kinds of companies that we fund. So if you're a startup in either one of those 2 buckets and you need kind of your Series A or seed round, come talk to us. That's us.
Thank you, Hussein. We have 2 minutes left. Do you want to improvise? Do some improv comedy, or do you guys have questions? We have questions.
Do you do anything in EdTech?
We'll look at it if there's. I mean, EdTech is there's a bunch of stuff in that space. It kind of depends on the company and the market that you're solving or the problem that you're solving. We're very product driven, by the way. So at these early stages, we don't really care about the revenue projections. I mean, they're all garbage in, garbage out. We care about the microeconomics of the business. So at scale, what does the business really fundamentally look like? We care a lot about how much cash the business is going to require. Another thing that makes us a little bit different in Europe is we genuinely don't believe it's easy to build a business in Europe. It's much, much, much easier in Silicon Valley. For the biggest reason being there's so much more capital available on the West Coast. So most of our businesses tend to relocate to the West Coast after we fund them. And we're pretty active at that. So our first company that we did out of the fund, we did with one of the Google board directors. And that company's really plugged into the Silicon Valley ecosystem. Our last company is doing the same exact thing. So we work as kind of a bridge to California. Other questions?
Nope. Okay. Thank you very much, Hussein.